All right, so quick update, being in the trenches, working every day, still very busy. So if you're hearing from your buddy's wife who does real estate once in a while, sells some house and says it's dead or it's not busy, then you're getting the bad information, because it's still very busy. This is actually a fantastic time to be a buyer. There's lots of opportunities right now, and homes are definitely selling. There's a lot of new construction incentives. So if you're reading the media, the market's crashing, you've got to understand the market is very hyper local depending on where you're at. So one broad generalization in real estate market is not going to be one size fits all. So and another thing is realtors never had to work in the past, right? A true real estate professional is pretty busy right now, because they know how to work. In the past, we haven't had to work. We were just order takers. Ever since COVID, people were moving to Florida, and realtors were just order takers. So if you're hiring a real estate professional, first off, make sure you interview them and say, how many houses did you sell last year? How many homes do you have under contract right now? Those are the questions you should be asking, especially if you're listing your home. And so what's going on in the market? What am I seeing every day? Because I'm out and about, and I've had people visiting. We're putting offers in this week. And so who's buying? Well, first off, it was kind of weird because I got super busy right after school started here in August, and it was kind of strange because usually people want to get here before school starts. But that changed this year in 2025 as I'm recording that, because first of all, I'm north, where a lot of our buyers are coming from. They didn't start school till September, even though we start school in August. And a lot of people were behind the ball selling their current homes. So we're very busy in the month of August, ironically. And then the other big thing I noticed is that a lot of folks are buying now, or coming down in October to look at homes to purchase. This is a lot of my empty nesters or retirees. They said, hey, you know what? We decided to make the move sooner. And they took advantage of their market. Maybe in some markets it took a little longer, so that's why people were later to the game and weren't able to sell their house till now. Or those folks that are in the Northeast areas, they're basically selling their house before wintertime, because as far as I understand, you're not going to have great marketability selling your house in the snow. So you have a lot of folks that sold their house right before wintertime now, and they're coming down and they're saying, hey, I need to be in a house by October, November. So nothing is normal anymore. And I think that's great for them, because the reality is that, not a lot of people are buying houses in October, November. It's the holidays. We're getting ready for Halloween. We're getting ready for Thanksgiving. Then it's Christmas. So it's not really the time people go out and buy homes. But if you have the ability to, and your home's up under contract up in the north right before winter, and you're closing before winter, and you come down here, that's a great time to be a buyer. We're getting some phenomenal deals. We're putting in offers left and right here, and people are not necessarily accepting them. It's not because they don't want to. Some people are being stubborn because they want a certain price that they think they're going to get from 2022. Or there's some folks that actually built their home in 2022, which was the peak of the market, and they need a certain price to break even. And after they pay real estate fees, closing costs, and whatnot, they need higher than what the actual market value of the home is. And people they're fearful right now. They don't want to overpay. So you have to be priced reasonably. So if you buy your home in 2022, and you must make sure that you have to sell right now, because now is not the time. And some of my folks, I've said to them going to listing appointments, hey, you're better off just renting the house out until the market recovers, which it will. If you watch one of my videos, I did a live on the market, and I said, everything's will be normal by 2030. I don't have a crystal ball, but I said that's a safe time to assume by 2030 we'll be in a total normal market. But we're abnormal here in Northeast Florida because we have a lot of new construction. So if you're in the new construction area, then even harder for you to sell, because builders are coming in their year ends and they're negotiating heavily with major incentives. So if you're a resale, you can't compete with that. You can't, unless you're an anomaly. You're on a bigger lot, you're in a neighborhood where there's not many larger homes, you have that square footage. You have that lake to preserve you. Whatever it is, you have to have an anomaly property, and that's why I say it's hyper local. Depends on what neighborhood you're in St. John's, how close are you to the beach. You know, I always use Nocatee as a benchmark because I live there, and Nocatee has always done well. It's been a fantastic master plan community, but it is coming towards the end. And, you know, there are opportunities, but you have to have somebody that knows. You should be interviewing multiple real estate professionals and asking them again, how many homes did you sell last year? How many homes are you working on now? That's the resume that you should be asking. And so I'm going to do a video as well, show you the numbers, the actual numbers in MLS, which are not always 100% accurate, because you got to remember, MLS sometimes doesn't record some of my new construction sales, and that goes for all new construction sales. If it's not a quick move-in or a spec home, it may not be in MLS, therefore it never gets recorded. And I still have a lot of people that are signing the dotted line to build in the next 10 to 12 months. A lot of people, because when people are building, they always think to themselves, hey, I'll have time to prepare. The market will get better, the rates will go down, and if they don't, at least I'll have time to prepare to sell my current home, get myself situated and ready, and then also I get to build what I want, where I want, how I want, which is, you know, the benefits of building a brand new home. So those are all those things. Let's look at the stats. All right, welcome to my computer. Really quick, if you haven't already subscribed to my channel, here, come to the channel, Living in Jacksonville FL. We are the official Living in Jacksonville FL channel, and also our domain is www.livinginjacksonvillefl.com. All right, so really quick, just to make good use of the channel, once you subscribe, you can go ahead and hit this hourglass here, and I'd highly recommend taking a look at Jacksonville market. Let's see what comes up here. There's so many videos that we've done that it's best to use this search button right here. So here we go. This one here, Jacksonville real estate market housing affordability. This is a good video that we did not too long ago, only 6 days ago, 196 views. Again, we go kind of into the depth of the Jacksonville market. All right, but more importantly, this is another really good one that I spent a lot of time putting together. If you really want to understand the market here in Florida compared to the rest of the U.S., go ahead and put Florida versus U.S. real estate market, and let's see what comes up. There we go, Florida versus U.S. housing market. What nobody wants to tell you. I also have a video here, new construction versus resale. So some really good stuff on this channel. If you haven't checked it out, I highly recommend it. I just announced also the next big master plan community here in St. Johns County, Everrange. So we do home tours, we do community overviews, we do lifestyle videos, we talk about what's going on in the market. So if you haven't already, go ahead and subscribe to the channel here. We have over 255 videos, and that search button will certainly help you out. If you're looking for a particular floor plan, just go ahead and put it in there as well. All right, so really quick, as I mentioned before, when I was talking about being in the trenches of the market, and you're watching all the news articles that's out here, I want to give you an example, right? And caution you, again, because not only is the market hyper-local, but like when you see an article like this, you have to be somewhat objective, right? So here we have on MSN, Sunbelt housing markets are so weak that home builder Lennar's average home price is down 22%. So much past the 3 years, Lennar, America's second largest home builder, has pursued an aggressive strategy, prioritize sales pace and market share, even if it means slicing deeper into margins. That approach helped the company keep homes moving in softer Sunbelt markets like Florida, Texas, and Arizona. Okay, now Florida, Texas, and Arizona have been hit hard, no doubt about it. A lot of the new construction is there, but now after reporting its weakest gross margin since 2009, Lennar is signaling it's ready to shift gears. Okay. For Lennar, this is an opportune time to pause, let the market catch up a little bit. The numbers show why. Lennar's average selling price net of incentives fell to $383 in Q3 2025, down 9.2% from the same quarter last year. So we're seeing a 10% decrease and 22% below the 2022 peak of 491,000. Some of that 22% decline reflects outright price cuts or the construction of smaller homes, but it stems from a surge in incentive spending, particularly I can't speak, mortgage rate buy downs. Okay, so what they're doing is they're going ahead and offering folks these huge incentives to buy down fixed rates in the 4 or 5% range now that rates are currently in the 6% range. Okay, so we've got to be really smart about when we read these articles, people, because first of all, Lennar should not be your benchmark, because I understand what they're saying here. We're saying here, going back to incentives, if you read the rest of the article, on 450,000 home, that works out to 64% in concessions. Sales volume was difficult to maintain and required additional incentives in order to achieve our expected pace to avoid building excess inventory. These guys are track builders, okay? And one of the big things that we're not talking about here, and I don't want to get in trouble or anything, but Lennar's not exactly a high quality track builder. I kind of put builders on different tiers. And again, if you subscribe to my channel, and I'll put these videos in the description so you can find the links as well. But I compare the different grades and levels of builders, and I put them in different tiers. And Lennar is a massive track builder. They just build thousands of homes as fast as they can, and then they try to incentivize you as the buyer, show you it's a good deal. But at what point do we really realize that, hey, maybe it's just not a high quality build? Maybe Lennar needs to beef up the quality of their builds, like some of these other, this is the second largest track home builder in the country. So, I don't know if these articles are really a good gauge for the whole entire market, saying, oh, Lennar's slowed down to let the market catch up. What about Lennar's puttered out and people aren't happy with the product maybe? Or, maybe, like I said in that one video, be cautious of new home sales incentives, right? They're dangling a carrot going, here, we'll buy down the rate, we'll give you this, we'll pay for your closing costs, we'll do all that. But then you're sitting in a house a year or two later and it's got a lot of problems. The question is, what's the quality of the build of this? And again, this is fully highly opinion. I'm not saying Lennar is a bad builder. I have no idea. I haven't sold a Lennar house, to be honest with you. So I have no idea. And this is purely an example of an article where people are reading these articles and they're justifying that the whole market's not doing well just because Lennar's sales are down. And then have you ever objectively questioned going, well, what if Lennar's quality is catching up to him and it's not up to par what it should be? Anyway, I digress. That's the point I'm trying to make on these articles. Let's go ahead and look at articles which make a little more constructive, if you will, okay? So this one's mortgage rates to drop below 6% by the end of 2026. Again, do we really know that? We had a rate drop, so here we go. Fannie Mae projects mortgage rates to fall to 6.4% by late 2025 and 5.9% in 2026, with rising home sales and mortgage originations over that same period. So mortgage rates are forecast to end in 2025, 2026 at 6.4 and 5.9% respectively. Let's see here what they said. The ESR group projects new and existing home sales to total 4.72 million in 2025, 5.16 million in 2026. So we're going to see a jump in housing sales. And then, so as I said earlier in the car, why did sales jump up in August? Well, rates went down in August. Rates, got to remember, mortgage rates follow what the Feds are ahead of what the Feds are going to do to rates, right? So just because the Feds lower interest rates, we've already seen a discount in interest rates back in August, and that's why we saw sales fluctuate up, because we were seeing people, first of all, get down in the low sixes, and then with incentives and buy downs from the builder, I had people that locked in at 5.6%. So that's maybe why we saw more sales in August. Maybe it wasn't just about the weather, or maybe it wasn't just about other people taking longer to sell their house. I don't know. Maybe it's a combination. But the point is, as soon as the rates get around 6, people get excited. And they did go, and people did get excited. And we have been busy the last week because the Feds announced that 0.25 drop. But it was already kind of baked into the current rates. Now we're seeing it go back up to 6.25%. But I'll tell you what, if this article is accurate and they say in 2026 rates will go down to 5.9%, a lot of people are waiting on the sidelines that are going to jump in. But see, my empty nesters, folks that sold their home up north and have a ton of equity, and again, in those videos I just showed you comparing Florida to the rest of the U.S., there are other markets in the U.S. like New York, New Jersey, Maine, New England area, D.C., certain parts of Ohio, outside of Chicago. They're killing it on the sale of their home. And if they can kill it on their sale of their home now before winter and come down here where new construction is given massive incentives, our buyer's market, days on market is high here in Northeast Florida, or you can pick up a new construction at a great deal, you're in a fantastic spot. That's why the smart people like you that have those opportunities are buying right now, and that's why I'm busy. I'm going to speak for myself. I'm not going to speak for everybody, but a real estate professional, majority of the top realtors are doing the majority of the business. So if you hear a realtor that's not working a lot, not doing a lot of business, it's because they're not working hard enough. Okay, let's go to the next article. Here we go. New home sales in the U.S. take unexpected jump. Okay, these articles were published September 24th, 2025. I'm filming this on 9/25/2025. So these articles are yesterday. They're not old. So here we go. Sales of newly built single-family homes jumped 20.5% higher in August across the U.S. and 3.3% in the South. Okay, that's us. So the median new home sales price in the U.S. was $413,500. Okay, so all right, we see newly built single-family homes jump 20.5% higher in August due to seasonal adjusted annual rate of $800,000 from upward revisions reading in July. Okay, so again, this article explains what I was talking about in the car. I saw a jump in the market in August instead of July, even after school started here. And why is that? That's because the interest rates came down a little bit. We had a lot of people on the fence that hopped back into the market and were able to get into the rates around the low sixes. Okay, according to Freddie Mac, the average 30-year mortgage rate has declined 32 basis points over the past 4 weeks, and it now sits at 6.26%, lowest level since October of 2024. Okay, so the downward trend in rates combined with the recent Fed rate interest cut signals a positive outlook for future housing demand. Okay, so this is an indicator of what's going on, what I was talking about in my car ride just a minute ago. All right, I want to also see something I saw earlier that it was talking about. Okay, here we go. Regionally, on a year-to-date basis, new home sales are down 22% in the Northeast, 3.9% in the Midwest, and 7.3% in the West. But new home sales are up 3.3% in the South. Okay, so folks, these are the articles. This is the FloridaRealtors.org. This is actually what's going on in the market. This isn't clickbait stuff that you see on the head of these web pages. I don't even know where the one I read from, MSN or whatnot. You got to read the real numbers, the accurate numbers, okay? All right, so now let me hone in on what the numbers are here in Northeast Florida. All right, here we go. So let's look at the actual numbers. These are MLS numbers, and as I said before, this won't reflect everything because you got to think about it. A lot of the new construction numbers, since we're so prevalent in new construction in Northeast Florida, a lot of the new construction that was custom built, or specifically homes that were built for my customers that were not looking at a spec home, not looking at a resale, not looking at a quick move-in home. They were looking to pick out their own lot, pick their own home and whatnot. Those never made it to the MLS because the builder didn't need to put those in MLS to market them, right? So those numbers and those homes are not reported in these numbers. So these numbers are not 100% accurate. This is just to give us a general idea of where the market is right now. So here we are, August 2025 stats. And again, that's the month where we saw a little bit of a boost. I think the numbers will even show better next month, and I'll do this more often. If you like that, make sure you put it in the comments below. So here we go. We've got, let's deselect all the counties. I want to talk about St. Johns County here. And all right, so in general in St. Johns County, which is a very big county, we're talking all the way from St. Augustine, which is completely different, especially when you get into city limits or Anastasia Island. Those numbers are completely different to, say, West St. Augustine, like think Silverleaf, or Northwest St. John's, for instance, in St. Johns County, and Nocatee, Ponte Vedra area. I usually use Nocatee as a benchmark because I live here. Nocatee's been one of the most wildly successful master plan communities. We're still kind of in the middle. We're not Ponte Vedra Beach on the beach. You'll see such a massive difference in pricing, which I'm about to show you right now because it's hyper local, hyper local, hyper local. We are not like South Florida or Miami. We are a completely different market. My brother has a place in South Florida that I'm selling. Literally, the days on market and the inventory there are completely different, okay? I'm talking Boca Raton down to Miami. They've got 9 months supply of inventory. They've got, I think I last checked, 120 days on market in certain areas where he's at on the market. So completely different down in South Florida. Southwest Florida, even more different because they've been slammed by so many hurricanes, and home insurance is so expensive down there. Completely different market than here in Northeast Florida, where home insurance is more affordable, where you can still be near the beach. We have new construction options, so completely different market. So here we go. It's even more hyper-local when you get into St. Johns County, okay? So here we go. We're in St. Johns County General. The median home sale is $550,000. It's down 7.6% in the last 12 months, okay? So houses are becoming more affordable, and I've said this in many of my videos. That is good, okay? We want it to be more affordable again. We had massive increases. We saw houses going up 33% from the COVID days, some even higher. So it's been ridiculous. So now we're starting to come down to reality here with a little bit more inventory. So 7.6% down. Closed sales from the last 12 months, our closed sales are only down 1%, people. Not a huge jump. Days on market, up 9%, okay? So we're seeing 55 days on market. That's what it took to get my last home under contract, my last listing. So you really want to pay attention to these numbers. Numbers don't lie. So if you have a home listed by an agent and it's been on the market for way too long, it's overpriced, it wasn't listed properly, it's not being marketed okay. So really, when you ask your agent and it's been listed, my house has been on, what's the days on market in the neighborhood, in the community, in the area? Okay, why is mine taking so long? There's something wrong there, people. Okay, the numbers don't lie. I always find it always happens right around that time frame. And I always, when I'm listing my customers' homes, I'm very cautious about days on market, because if something's not right, I shouldn't be listed longer than days on market. It really shouldn't. So that's 55 days on the market, 9%. This is for all of St. John's, and you're going to see some differences here when you get when we narrow it down some more. Watch this, okay? All right, so here we go. We're at 97.2% list price received. Not bad, down 0.1%, not a big difference. Okay, closed over list price. Okay, that's below. Okay, negative 1.6%. Home affordability, it's gone up 9.1%. That's good. It's at 48. It ain't that high, but it's okay. It's getting better. And then we're seeing sold price per square foot is down less than a percent, $246 a square foot. Okay. Pending down 16% to 402. Again, we have a lot of homes that are listed not at the right price, so that's why we're seeing that. And then, of course, we have new listings. New listings are down 27%. That kind of stinks because we need more inventory, guys. The more inventory we have, the more balanced our market will be. So that's not great. Looks like a lot of people are giving up and they're putting the house up for rent, or they're just saying not this year, which is fine. Unless you have to really sell, don't list it, okay? But life happens. That's why people are listing right now, and I'll tell you that story in a little bit too. Active inventory is down 7%. That's not good. And then months of supply of inventory is down 6.1%. That's 4.6 months inventory. Remember when I said we're not having a meeting of the minds between seller and Mr. Buyer? Okay, Mr. Buyer is fearful of the market. They want a good deal. Mr. Seller is saying, hey, I bought the house in 2022. I don't want to lose money because I have to pay the expenses of selling the house, and I want what I paid for it. Or there's just some people that are greedy and going, hey, I want 2022 pricing, even though I bought back in 2017. I want to rake it in on the profitability. And there's a lot of people like that, and they have every right. If they don't need to sell, why not? Okay, so watch this. We're going to change this really quick. We're going to go ahead and we're going to knock it down to, let's say, okay, remember this, median price, $550,000, okay? I'm going to knock this down to just, let's say, well, let's uncheck all of them, and we're going to go ahead and we're just going to do Nocatee, okay? Let's just go ahead and put Nocatee in there. All right, did you see that? The median sales price jumped up from $550,000 to $704,000. Now, okay, notice that. Also, days on market, kind of close, nothing big there. But anyway, so let me go down the line here. So in Nocatee, we've seen the median sales price go down 6.6%, which is great, making it more affordable. All right. Closed sales are up 27.3%. People are jumping in the market and trying to get a deal because it's a great location, great neighborhood, great value. I'm an absolute bull on when it comes to that market. People ask me all the time, what do you think about the market long term? Look, I'll show you something in a second to prove my point, just because of the location of Nocatee anyway. And the people that, downplay it or whatever, I understand you have your reasons for it, but let's be honest, not everybody loves it because it's not affordable. It's not affordable. Median sales price is $704,000 is not really affordable, okay? Days on market, 51 days, down 5.6%, okay? That's interesting, okay? All right. That's gone down a little bit. So days on market were a little bit higher last year, so it's gone down. List price received, 97%, nothing big there. Closed over list price, down minus 55%. So everybody wants those old Nocatee prices. They're not getting them anymore. Home affordability, 37.5. The other one for St. John's was, 44. So that's up 7.1%. That's not great. It's not really making it affordable. Price per square foot down 3%. We're at $293 a square foot. That's good. I've always remembered, I would say, hey, Nocatee average price if it's a good house, good location, about $330 a foot, depending on the house. There's so many features in the new construction houses. There's a major swing on price per square foot. So you really need a real estate professional to make sure you understand the comps. You got to compare apples to apples. So I used to say around $330 was an average price per square foot last year. Then we saw $311 dollars a square foot. Now we're seeing around $293 a square foot. And again, new construction, when they give you incentives, they don't lower the price, but they buy down the rate for $25,000, $30,000 so you can buy your rate down dramatically. They pay your closing costs instead. That won't show on the comps. It will still show the higher price per square foot. But in reality, when you think about all those additional incentives, the price per square foot would be lower to the $293 a square foot range. Pending 61 days, 61 pending, sorry. So that's gone down 9% because a lot of people are not selling or decide to take their home off the market. 72 new listings, that's down 15%. Not good. We need inventory. So luckily we have the builders to make up for that, and a lot of those homes are not reported in these numbers. Active inventory is down 10%. Not good. We want more inventory. The more inventory, the more supply, the better. That evens prices out. And again, of course, months supply of inventory is only 4 months, even lower than overall St. Johns County. That's why when you hear Nocatee and people go, well, why do I have to pay $100,000 for the same house here in Nocatee than out west in, say, a Silverleaf or a Rivertown? And I'll say, you know what? It's all about the location. It's all about supply and demand. That's it, okay? Silverleaf's a massive community with thousands and thousands of homes in the pipeline. Nocatee is at the end of times here, so it is getting limited, and people are jumping in the last minute. They always do. Everybody was waiting, going, you know what? I'm just going to jump in. I want a new house. I don't want to buy a resale. The resales aren't really that big of a difference in price. It's not really that great of a deal. There are exceptions to that. with a good realtor. We found some pretty good deals lately. But again, so here we go. Let's switch this up even more, okay? Watch this. We're going to go ahead and do, we're going to select all, deselect all, and now we're going to go ahead and we're going to do Ponte Vedra Beach, okay? Let's go to Ponte Vedra Beach now on the other side of the intercoastal. Look at that, folks. This is my point of why I'm bullish of Nocatee, okay? Okay, I'm sorry I'm long-winded, but for all my people that are geeking out, know their numbers, and they want to know the numbers, they're listening to me very carefully right now. Smart people listen to me carefully. Did you notice how St. Johns County in general is major? We're talking average median home prices around $550,000. Then we go into Nocatee, which is a little closer east, closer to the beach, about 5 miles from the beach, on the other side of the intercoastal, and it went up to $700,000 median sales price. And now all of a sudden we're on the beach side across the intercoastal, and now the median sales price is $1,050,000. Big jump, huh? My point being is the closer you are to the coastal areas, near the beach, people want to be near the water, the price goes up. Also, there are older homes there, not as much supply. There's no new construction really over there. A little bit, but not a whole lot. They're starting to just take old homes, tear them down, and rebuild them because the median sales price is $1,050,000. When construction is done in Nocatee and there is no more inventory, new construction, guess what, people? Resales are going to go back up again. So anybody who's fretting going, I bought in 2022, unless you absolutely have to sell, you should hang on to your property because it's going to recover very quickly here in the next year, especially if you see rates go below 6%, because this is still an amazing place. And you can see what happened in Ponte Vedra Beach. I saw what happened down there. It's same thing happened in South Florida back in the day when I lived there. Anything east of Federal Highway, here east of Phillips Highway is gold real estate. So here we go, Ponte Vedra Beach. They're down 21.5% in the last 12 months on the median sales price. Their sales have gone down 28%. A lot of people are hanging on to the homes, just not a lot for sale over there. Days on market have gone up 122%. We're seeing 78 days on the market. It's just not affordable. It's a very special group of people over there. You know you're a special group of people over there. You're by the beach, guys. You're in Ponte Vedra Beach. Special group of people in a good way. And then, of course, closed over list price, 0, minus 100%. Home affordability, 25. It's gone up 28%. Okay, that's good. I mean, still not very affordable, but anyway. $412 a square foot, heck of a big difference than Nocatee at $298 and the rest of St. John's being at $250 a square foot, but that's gone down 0.6%, not even a percent. Not a big difference in the last year. We're in a recession, people, but hey, these prices have only gone down 0.6%. New pendings, they're down 36% at 19, just because there's just not a lot for sale. And if there is anything good for sale, a builder, a custom builder, a flipper, an investor will buy it and renovate it and sell it at a mint, because all the homes are old over there. That's why people come over to Nocatee. They can buy new, not have to worry about renovations for the same price or less still, and still be close to the beach and not worry about being so close to the water that your home insurance is going to be outrageous, okay? New listings 30, 0% flat in the last 12 months. Active inventory down 6%, 126. Supply of inventory is 5.5 months. That's up 30%. Not bad. Still not enough inventory for that. So that's what's going on here in this section in North St. Johns County. When you start going to South St. Johns County, like near the St. Augustine city limits, even though it's St. Johns County, it's completely different. And remember, when you're in St. Augustine in St. Johns County, but you're in the St. Augustine city limits, your property taxes are going to be higher than if you were on the outskirts of St. Augustine city limits. So completely different, because we're talking about St. Johns County being St. Augustine, the city of St. Augustine, outside the suburb of St. Augustine. Now we're talking St. John's, we're talking Ponte Vedra, we're talking Julington Creek. All these areas of St. John's completely different. It's hyper local. So that's what's going on in the market, people. And these are the numbers. They don't lie. All right, people, I hope you enjoyed this. This is giving you a lowdown of what's going on from somebody that's in the trenches, what's going on in the market. We've been busy. This is September 2025. If you like this report, make sure you hit subscribe, like, and put in the comments if you want to see more of it. If you want me to get deeper on the numbers, I certainly can. I can show you the trends even deeper. So if you like that, please make sure you put it in there in the comments that you love it. Again, my name is Greg DiTullio. I'm a real estate broker here in the Northeast Florida regions, and I'd love to be your real estate resource of choice. I can't tell you again how important it is to hire the right person. You should be interviewing multiple realtors, asking them what they did in business last year, what their current business looks like this year. If they haven't sold at least 12 homes last year, please, people, find yourself a real estate professional that is constantly in the trenches and knows what's going on. This market has been fluctuating so much. Really quick story at the end here. I know I'm long-winded, but we had a deal where we went into a contract and I was representing the buyers. And again, this is so imperative when you're listing a house that you have a good agent on both sides. Really, it takes two good agents, a listing agent and a buyer's agent right now, to work through these deals, because so many deals are getting canceled and falling out of contract. Okay. And you don't want to have your home taken off the market under contract and then have to go back on again. But I digress. I go back into this situation where somebody hired a discount broker to list their home. Okay. The home was not prepared for a listing. The yard was just not looking that great. The home didn't show very well, but again, it was in a particular area, and we're talking hyper local, where there was not a lot of options for that home. And so my buyers had a hard time really trying to decide on it, but they said, hey, we're going to give it a go. We negotiated a pretty decent, okay price. But when we got into inspections, this is what happened. The home didn't have utilities, so the inspector couldn't fully inspect the home. That's a massive big boo-boo, okay? Utilities should be on, but whoever was taking care of the home at the time let the utilities lapse, and we couldn't do a full inspection. So it dragged out because we had to extend the inspection, and my buyers just got a bad feeling about it, that the home just wasn't cared for and it wasn't listed properly, and they decided to cancel the contract. So this is just what I'm telling you is going on out there. If you're going to list your home, make sure you have a true real estate professional that's going to give you an honest, true evaluation on the value of the home, and prepare it properly for sale, because you only have one chance. And the longer it sits on the market, you're devaluing the home. So when this home relists, it's going to be harder to sell, because a lot of people are going to be asking, hey, why did it fall out of contract the first time? And what are we going to say? Oh, well, the home wasn't properly listed the first time. Okay. So make sure that you have a true real estate professional that gives you a really good indicator of what, what your house should sell for. Prepare to sell it. If it needs to be staged, make sure that it's staged properly. We had a property where we had to stage it properly. And, taking a cheap route is going to cost you more money in the end. So a good real estate professional that's also going to provide those services, you may pay for it, but it's better off than doing a discount broker and ending up in this kind of situation. And then, of course, if you're thinking about relocating the area and you want some local boots in the ground, and you're considering new construction, that's our specialty. I'd love to be a resource there. I love that. I'm a son of an architect. I've got multiple builds with all the builders in town, know all the sales reps. They're not all created equal, just like not all agents are created equal. But part of our services, not only do I help you with the process of finding the right home in a very large spread out area, I can hone it in with just a conversation and a few questions answered on where you would be the best place for you and your family, cutting out a lot of wasted time. And then once you get into the right deal, if you decide on new construction, we'll show you both to compare both markets. If you can get a good deal in resale, great. If not, new construction has some great options as well. And if you do decide to do new construction, go new. Part of our services is also having someone go and attend the design center with you. That's a very laborious process mentally for 2 days, picking out your countertops, your flooring, your grout colors. So having somebody there that specializes, used to work for a builder, attend that with you, as well as the builders, designers. That is a added bonus that we have as part of our services that are free to you. Also, because it's so important on new construction, we make sure that we do that pre-drywall by third-party inspection, as well as a final inspection on your new construction, so that not only is your home built right, but that you have historical data on your home. Should anything go wrong in the future, that you can look back on these inspection reports and go, hey, you know what, this came up before, it obviously wasn't properly fixed or remediated. So those are so important that we offer that in our services as well, unlike any of the local brokers in town. And of course, Those are just some of the services that we offer as your advocate. Most of the time, well, all the time, builders pay our commissions. It's an added marketing fee built into the price. So if you don't choose to have an advocate or a real estate broker on your behalf, you're not saving yourself any money. You're just saving the builder, giving them bigger profit margins. So it's to your benefit to have an advocate on your behalf. And I can tell you over and over again, if you look at message boards and you go, well, why does this builder have such a bad reputation? Usually the people that are leaving bad reviews for builders online, most of the time is because they didn't have a proper real estate professional that understood the process, a good team behind them, or they had no realtor at all. And so that's why you see that happen. This is construction, folks. It's tract building. You're building a lot of homes. You need to have a good team of people, including a good advocate on your behalf. So I'd love to be that. My name is Greg DiTullio. The videos I mentioned today, they will be following this, as well as posted in the description, so that you can check those out if you haven't already. And I will see you on those next few videos.